Most traders probably don't know how to mark their break of structure correctly, or maybe they don't even know how to trade break of structure like a pro. But in this particular video, I will show you how to trade break of structure, what is break of structure, and how important it is for you to be able to mark out your break of structure correctly. Now stick to the end of this video, and I promise you will learn a lot from today's video. If you have been following me for long, you will see or you will notice that I usually say a break of structure is just a trend continuation. But today, in a very simple term, a break of structure in a simple term means when price breaks for a new high or a new low after abandoning its old low. Now, if this is our movement, because price doesn't move in a very straight line, so if this is our movement and this is our new high. Now, for price to be able to abandon this high, price need to create a new high, and creating a new high will cost us a break of structure, which means after a break of structure, there will be a pullback, and after the pullback, there will be a new high being created. So therefore, this particular high is now a low. This particular high is now what? A low, and this particular one is now our new higher high. Now after this particular high, our pullback, and again a break, a new break. Now this previous high that is happy of being a high before is now a low, and this particular man over here will still become a low once price pull back and again breaks this particular place. You understand that now? So in a very good term and in layman understanding, this is just a trend continuation. It's either we're breaking this structure and keep pushing to the upside, or we're breaking it and keep pushing to the downside. Now have it in mind that in the market, you will not see something like this. So this is very clear over here because we are just using an illustration. This is very clear, but you might see a break of structure as like this. You must see something like this. Yes, don't be afraid. This is also our break of structure. So price might not be in a clear pattern, but this is our break of structure. This is also our break of structure. Now, what do we call these inner ones? These inner ones also serve as our break of structure too, but this is what we call our internal break of structure, and this is our external break of structure. Now, this is our internal. Yes, we have to identify them because if we are diving down to the 1 minute time frame, they will be important in that particular aspect. Every break of structure has a place where is the king over that particular area. So this is our internal break of structure, and here is our external break of structure. Now, if you are a price action trader, you see something like the same. This is the same scenario, but you'll be calling it higher highs, higher low, higher highs, higher low, higher highs. That is just it. A change of character is when price is tired of pulling back and keep breaking structure, and price want to reverse and start going to the downside instead of continuing going to the upside. Price is going to create what we call a change of character, giving her the signal that it's time for me to mia and start pushing to the downside. And again, if you see something like that, price probably give the signal with liquidity, let me say equal highs, and when there's equal highs, liquidity reside in that particular area. This might be your resistance area or your support area or your supply area or anywhere, but just know that liquidity is residing there. After these two equal highs is being formed, you see something like a down, and price will now break this previous low. After breaking this previous low, price will start pulling back and continue breaking the low and start continue in that particular trend continuation to a bullish momentum move. Now, this particular move is a bullish move because we are breaking structure to the downside, creating our lower low, lower high. But this particular structure is a bearish move because it's a bullish move. This is a bullish move, so, and this is a bearish move. Now, in this particular bullish move, we are creating structure to the upside, creating our lower higher high, higher low, higher high, higher low. But in this particular place, we are in a bearish move, creating our lower high, lower low, lower high, lower low. Before teaching you guys how to trade this particular break of structure, how to trade it like a pro, I need you guys to understand that you need to know time frames very well. For you to master your time frame will also make you profitable. Now, in technical analysis, understanding your time frame will help you decide which trading style are you going to jump into. You understand? If you are trading the 1 minute to 15-minute time frame, just know that you're a scalper, and a scalper is a trader who is looking to capitalize on short-term price movements. They are looking for small percentage gain, and after accumulating the small percentage gain, then I think probably it will be a very big profit risk to reward ratio, or a big profit P&L. Now, if you are trading the 15 minutes, 30 minutes, or 1 hour time frame, just know that you're a day trader. And a day trader is like a scalper. However, they are looking to hold their trade longer to capitalize or bigger percent gain. And again, if you are trading the 1 hour, 4 hour, or daily time frame, you're a swing trader. Yeah, you're a swing trader, because a swing trader is someone looking to capitalize on an overnight price movement. If you're holding your particular position or a particular position overnight, 2 or 3 days, just know that you're a swing trader. And if you want to do your analysis, you start from the day 1 to 4 hour and 1 hour. If you're a day trader, you start from the 1 hour, the 30 minutes, and the 15 minutes. And again, we also have a position trader which also focus on the monthly time frame, weekly time frame, and the daily time frame, because a position trader is someone looking to capitalize on a long-term investment gain. Yeah, and all these also, their risks are also attached to it, because a position trader, the risk is very small. A swing trader, medium. A day trader, little to medium, or a bigger than medium. But a scalper, that's the highest risk. That's the highest risk, because you're making a little money, but that little money, you're making it 100 times a day. And after the end of the day, your portfolio will be in a profitable means. Back to our chart. Let me teach you guys how to trade break of structure. Now, a particular area or a particular aspect on trading break of structure, just simple. You can trade break of structure using pullbacks, because after a break of structure, there must be a pullback to the other block being left behind, and you knowing how to pullback, you need your Fibonacci 2 level. Now, for example, we have a movement like this, and this signals our break of structure to the upside. This is our pullback. We need to trade this pullback. Now, for us to be able to trade this pullback, all we need is you pick up our Fibonacci level, you pick from here to here our premium and our discount area. Now, once price retreats down to this discount area, we'll be looking for opportunity from the lower time frame, be it our 15-minute time frame or our 5-minute time frame. We'll be looking for opportunity to buy. As easy as that. So all you need to do, you mark out your break of structure from the 4-hour time frame, you go down to your 15-minute time frame and look for opportunity to buy or to sell. You mark out your break of structure from the 2-hour time frame, you go down to the 1-hour time frame or your 15 or 5-minute time frame and look out for opportunity to buy and sell using pullbacks. You understand? And if price should retreat to the discount area, if price should retreat to this particular area, you wait for a change of character that price is already changing to the upside. Let me show you guys an example. Now guys, I'm going to teach you how to trade a pullback. Now, first thing to do is you pick a time frame. So this today we'll be going with our 4-hour time frame and our 15-minute time frame. These two only. Now, our 4-hour time frame is just to decide the directional bias of the market, if you are bullish or bearish. While our 15-minute time frame is to find for our entry model and our risk reward ratio, and we are in the market and we are also out, as easy as that. Now, in our 4-hour time frame, you can see probably we are bullish from the 4-hour time frame. You don't need a smooth sayer to tell you that we are bullish, because this is our break of structure to the upside. This is a new break of structure to the upside. So, but all of a sudden, we have our change of character, which represents price saying, okay, I'm not already going up again. It's time for me to change direction and start pushing to the downside. So we need to join this particular aspect. We need to join this particular movement, because we have our buy side liquidity residing below here. So we need to join this particular movement down to this particular area. Now, how are we going to do that? After marking out our change of character in the 4-hour time frame, this is it here. All we need to do is just go down to our 15-minute time frame and wait for our entry. This is our order block because this is the last bullish candlestick before this impulsive move. So we need to go down to our 4-hour time frame, our 15-minute time frame, and wait for our entry. Once we find our entry, then we are going to stack in our position and enter this market. Now we're going to use a simple entry model, which is our change of character again, or our break of structure. This is a very simple SMC entry model that you need to use, and again, a combination of liquidity, fair value gap, imbalances, and change of character. Let's dive in. So guys, this is our order block from our 4-hour time frame. We are leaving it like this. So now what we expect price to do is to enter into this order block. Now this is the 15 minutes time frame. Now once you have price entering into this order block, you wait for a change of character to the downside, because price entering here will move in a bullish form. So you wait for a change of character to the downside before you joining the trend. Now, as you can see, we are already in already. We are in this particular market. Let's wait for our entry model. We can't just start stacking in our sell position just like that. No, we are going to wait for our entry model. Boom! Just exactly as what I expected. This is our clean entry model. Our change of character to the downside, which we need, and our order block, which is here. After seeing this, let's put in our risk reward ratio. Now, where will your stop loss be? Some might leave that stop loss here. Hey, don't let liquidity deal with you in the market. Let your stop loss be above here. This is how many pips? 20 pips. And we are looking for times 2 of this. Okay, this is enough. As easy as that. You can see it. Obviously, you can see that price gave us I think 1:3. More than 1:3. Clean, without any mistake. You do this to every break of structure you see, and you do this to any change of character you see, and your risk to reward ratio will change.